And joining us amidst all of this talk of GST reform, it's a big move certainly that has been announced by the central government. Joining us is former Deputy Chairman of the Planning Commission, Mr. Montek Singh Ahluwalia. Thank you so much, sir, for speaking to us. Let me begin by asking you, while you have argued in the past for a uniform 14% GST slab, can you explain to us why you believe that this model would balance both fiscal needs and fairness better than the current multi-slab system, and would you welcome the move that has been announced yesterday by the government?
Well, let me say that, insofar as the move announced yesterday carried out the Prime Minister's promise of a sort of a Diwali gift, obviously the lowering of rates has been welcomed and will be welcomed by consumers pretty much across the board. But I think if you look at the kind of reforms you need in GST, then you get a somewhat different perspective. Now, I realize that everything can't be done at the same time, but keeping in mind where we should go, I think there are certain things that we need to keep up front. The first of them is that, at present, we've lowered a lot of rates to 5%, and then at the other end of the spectrum, we actually will have a 40% rate. Now, that's a very wide range, and I don't think that makes any sense. If you look at what is the theory of the GST, most people who defend and recommend the GST have said that it should be a simple tax at a uniform rate. Now, Vijay Kelkar and Arvind Modi and one other person, and these two were the people who originally worked on the GST and recommended the change to a GST system. And Vijay was actually the chairman of the 13th Finance Commission. They have recommended that the rate should be 14% across the board, of which 6% would go to the center, 6% would go to the states, and 2% would actually go to urban local bodies. Now, this is very important because, in all the discussions that you see, how to get to Viksit Bharat and so on, the pace of urbanization and the growth of cities is an extremely important part of the transformation. And this just cannot happen unless more resources are made available to the urban local bodies. Remember, these local bodies lost a lot of revenue in octroi. And I think you need to have an assured source of revenue to them. So I think the recommendation of 6 plus 6 plus 2 as a single rate was a very good one.
But if
at the moment, we have reduced the number of rates. We've got rid of the 12% rate. All of that has been moved down to 5%. And we've got rid of the 28% rate because the 28s have moved down to 18 and some have gone to 40. But that's a very wide spread. And personally, I feel that, we should very early on make the intellectual case that if we want the GST to succeed, then the bottom rate of 5% should actually be raised in slow steps. It could go up to 8. So you could have an 8% rate, and you could have a general rate of, let's say, 18%, and then you could have a sin rate, which is higher. The problem with having multiple rates is that a huge incentive to evade the taxation by misclassifying and so on. There's another problem with the 5% rate, which I don't think is widely understood. In the 5% rate, what happens really is that all these people who are paying, who have a final rate of 5%, have to pay input taxes on their inputs. And those taxes are usually at a much higher rate. So as a result, what you get, if you lower the output rate to 5%, you'll get many situations where they will not be able to claim the input tax as a set-off. This will actually encourage them to look for suppliers who actually don't pay taxes. So you're actually weakening the inner structure of GST, which encourages compliance, which encourages people.
Mr. Ahluwalia, the counter to that is that a lot of essential goods are being taxed at 5% or even 0 as far as yesterday's announcements are concerned. Your model, which you are suggesting, even though there are serious concerns that you are raising, this would push up the prices on basics from food to clothing. And this would not just hit the middle class, but also the poor people of the country the hardest.
Well, let me make one point. I think it's always tempting to introduce a progressive element in the indirect tax structure. But I think the basic logic of the GST around the world is that you don't try to do progression through the GST. You do that through direct income transfers, you do that through the income tax, you do that through special programs aimed at the poor. But the domestic indirect tax does not have a wide variation. If you're going to have a wide variation, then you might as well have 5%, 7%, 9%, 10%, 12%. So I think that I realize that this is politically very difficult to sell. But I think if you were to get a bunch of experts to prepare a sort of a recommendation and to explain to people why this is a good idea, you will get a better understanding of what is happening. I mean, remember, every country has poor people and middle class people. And remember, we are exempting 50% of the items from taxation completely. I don't mind if you take some of the 5% items that are specially viewed as sensitive and exempt them also. So make them zero. Or rather, they're not taxed, zero tax. But then what is left can be taxed at a progressively higher rate. Look, if you were to explain the reason for narrowing the difference and say that, look, every year, this 5% will be raised by 1 percentage point. So 5 goes to 6, and then it goes to 7, and then it goes to 8. I don't think that'd be a huge problem. And particularly if you say that we're taking some goods and completely exempting them.
Right.
I think that's very important. The other thing in the present rate structure is that we have continued this business of a lower rate if it goes below a certain value, a higher rate if it goes above a certain value. That is also not really consistent with the logic of GST. I mean, for example, in hotel rooms, if the hotel room is less than something, then it's one rate. If it's more than something, that's another rate. All this leads to enormous difficulties in actually running the system. So, I mean, that's my feeling. I mean, there's no doubt that the reduction in rates has been welcomed. So let's take it as a first step. But look forward and see where should this tax head.
Right.
And I think it would be relatively easy to make the case that we can't have a huge dispersion. Maybe we should have we should end up with at the most 2 rates. Okay. So, I mean, if one rate is 18%, maybe the lower rate can be 10%. But then the 5% should be brought up to 10%. The 18% can stay. Some of the 28s have been brought down to 18. And then you'll have a small set of the sin tax area, which is outside. I mean, there are even there.
So you're not saying the single slab is ideal. You're saying there should be a differentiated slab, because that was actually what I was going to ask you, because we've seen Mr. Rahul Gandhi, for instance, come out and suggest in the past a single slab of 18%. But the point in our country is that a family buying basics, whether it's milk, whether it's soap, so on and so forth, why would they be paying the same rate as somebody who's buying, for instance, luxury appliances or vehicles?
Then you should say that you are not in favor of a GST. I mean, look, I am not saying the fiscal system should ensure justice and should ensure fairness and should be tilted in favor of the poor. Now, the way you do that is by having a progressive income tax, by having a good corporate tax, by having a simple domestic tax, which has a lot of exemptions, 2 major rates, and then 1 sin rate. And you have a lot of direct tax transfers, special programs. The totality of all these are likely to create a fiscal system that is more efficient and more just.
Right. And why would you think...
Let's be clear about one thing. The original purpose of going to the GST was the belief that by moving to a GST, we would go to a system that would be very efficient in collecting revenues. That has not been achieved, because if you look at the revenue from the GST as a percent of GDP, then if you compare that with the earlier taxes that existed, the excise and sales tax and so on, before the GST was introduced, that was about 6.5%. Okay.
Hmm.
The most recent information we have about the GST is about 5.6%. And then there are a lot of cesses that have been added. And if you add the cesses, you're still a little below 6.5%. And that is between 2017 and 2024. That's 7 years. During this 7-year period with buoyancy, you should have expected the GST revenue as a percent of GDP to rise. It hasn't risen. So I think it's not functioning the way it was meant to.
Right.
And I think the reason for that is a multiplicity of rates. We have reduced the number of rates, and that's good. But my point
But what do you
is
attribute this to, sir? Why do you think successive governments have resisting moving towards, fewer slabs despite experts having this kind of consensus? Is it because of the political economy concerns, revenue anxiety, or just lack of boldness on part of whichever regime has existed in the past?
No, I think, frankly, even amongst so-called, there are very few real experts on tax policy. I mean, economists always talk about it, but I would call it very, very few real experts. I don't think that the view of experts has actually been given adequate voice. I mentioned Vijay Kelkar and I mentioned Arvind Modi. These two people really do have expertise, and they must know what they're talking about. Now, they are saying 6 plus 6 plus 2 equals 14. Just have this across the board. Have some exemptions, and if you want a little extra tax for the very luxurious products, do that, but otherwise uniform. Now, either we say these people just don't know what they're talking about, which is fair enough, and let them defend themselves. But there should, in my view, be a debate on this. And that should not be a debate which is trying to criticize what is being done. Because after all, what is being done is fulfilling a promise which the Prime Minister made, a sort of Diwali gift, lowering of taxes. Governments like lowering taxes every now and then. And, if they can bear the revenue loss, there's nothing wrong with it either. But if the name of the game is what should the reforms be, my view would be that maybe the finance ministry should commission some of these experts to prepare a paper which they can put before the GST and suggest that over the next 3 years or 4 years, can we move towards such a system? Now, if these experts say there's no need for that, and the present system with a 5% rate and a 40% rate is okay, then it's fine. But my guess is that any group of experts pose this question will say that this differential is too wide.
Right.
And I think it's very easy to persuade people that we will close the gap in slow steps.
Right. You've also called this cess an aberration. You've also pointed out that it generates tax revenue which is not shared with the states. Why do you believe that cess has fundamentally undermined the spirit of GST, the federal spirit of GST, that is? Because you have certain finance ministers who have complained about it outside, but at the end of the day, as the government says, the decision has been taken with unanimity and all states participating have agreed to the final shape that the GST has now taken, or the rates that have now been announced.
No, look, clearly they have all agreed. Some of them have expressed concern. Many of them raised the issue of how are we going to be compensated, and that they understand will be taken up separately. In my view, and I've said this in other programs, there's a problem with the way the current decision making is done, because the decision making in the GST is a closed body. I mean, we don't know. The rest of the public doesn't know what is going forward and what is finally coming out. Even in the national budget, the government puts forward a budget, it's discussed, other people comment on it, and based on the comments, the government makes a moderation or modification. Here, we're only seeing the final output. We know that there was a lot of discussion, but we don't know what the different initial positions were. Now, my view would be that it would be a good idea to pose the question that we've got what we've got, and hopefully it'll do well. But what is it that we want in, say, 3 or 4 years' time? And let's give the GST a position paper done by some experts. Government doesn't have to be committed to it. I mean, the finance ministry could simply say, this is an expert report and let's discuss it and make it known to the public and let people criticize it. And those who want to push this idea should also be encouraged to participate in the discussion, to get public opinion on their side, and to persuade state chief ministers, finance ministers. I mean, this is a very complex thing, and most finance ministers sitting around a table, they would like the idea that taxes are being reduced because they would like to take credit for it. And then they will raise the question, what about our resources? And they'll view it as a separate issue. Well, that's one way of doing it. But I personally feel that, if the idea is to create a GST, and believe me, in terms of the international assessment of India committed to reform, committed to setting up a fiscal system that will support the transition to Viksit Bharat, the idea of India making a significant step forward towards a rational GST would be widely welcomed, and it would be seen as a substantive reform. The present thing is a bit of a cleanup. I mean, it's good that we've got rid of 2 rates, but we've got a very wide range of rates, and there are for particular commodities different rates depending on values, which is again inconsistent, the value of the transaction. I mean, for example, shoes below something are charged at one rate, shoes above something are charged at another rate. This is not part of an ideal GST. And, while it looks as if we are doing this to meet the needs for progressivity, I think the public could be persuaded that the need for progressivity is better met by exempting things that just shouldn't be taxed, which are the consumption of the poor. And already, 50% of the items that are consumed are outside the GST. They're not charged tax at all. So you can increase the numbers. But in what is taxed, I think we should have a modern, rational GST. And that, I think, would be a little different from the present book.
Okay.
But
I must also ask you, sir,
as a medium-term objective. It's not something you pull out of a hat. There's a lot of persuasion that has to be done, a lot of general understanding, and so on.
Absolutely. It's a very challenging and a difficult task. But in this particular case, with the slabs and the tax rates being slashed, how much of an impact do you see that having as far as demand, as far as consumption is concerned? And we're also talking at a time when the tariffs from the United States are kicking in. How much of an impact in the context of all that could be potentially offset? I know it's very hard to give out a number, but how do you see that playing out?
Well, let's keep the Trump tariffs out. I mean, they're a mess. They're an ill-thought-out idea by the U.S. administration. This is not our reaction to the Trump tariffs. I mean, we have to do many things to strengthen ourselves to react to the Trump tariffs. This is an item by itself. I will want to mention one thing, and that is that, when you lower the tax on a producer to something like 5%, the producer is buying inputs which are being taxed at a much higher rate. So as a result, what happens is that the total accumulated tax credit that he's due doesn't get paid to him, because at the 5% rate, there's no refund. I mean, you either cover it by the tax that you're paying, or you just carry it forward. But if your production structure is going to remain the same, carrying it forward doesn't help. Now, at the moment, I mean, what is happening is that for the 5% rate, the tax paid on services is not allowed to be covered. The tax that is paid on investment and capital, that will not be covered. Only the tax paid on goods purchased will be covered. And that, if that's at a higher rate, that may not even suffice. And the net result of this would be that the reduction in price that you get will be less than the apparent reduction in the tax rate. So, that's another factor that has to be taken into account.
All right. Mr. Montek Singh Ahluwalia, thank you so much for taking the time out and speaking to us here at Times Now, sir.